All right, we're back at it, ladies and gentlemen. Official test start time 2 minutes. Need one quick second. There we go. Much better, much nice. All right. I have to do this direct because that's the only way we'll be able to do it. We need to get some additional extension pieces. Let's go Bloomberg. As you all know, 5 pages, 5 paragraphs each, 5 words each sentence, 5 computer spaces in between, 5 revisions. You can use your hyper-scientific, you can use artificial intelligence, any type of technology, but you must show the work and share it with the class. If you do not show the work, I'm going to assume all you did was use technology and you will get 0 credit for it. All right, so I have to do this way, um, again for fair use, right? Let me go back because I have it, but not in order. Oh, okay. Give me one quick second. Let me disconnect from here too. We're gonna start with the China show, and then um the Asia trade, which we just did anyway.
Away from the market open in mainland China and here in Hong Kong. You're watching the China Show. We are live at the city's inaugural Women Chief Executive Summit. I'm Yvonne Mann.
Yep, that's happening now. A bit of a flashback there from last week. I'm David Inglass. Good Monday morning to all of you. To continue that theme from last week, the White House says China will suspend some rare earth export controls and drop investigations targeting U.S. companies and the chip supply chain. Now, we're looking at gold today, dipping ever so slightly back below the 4,000 level here after China's move to end this long-standing tax rebate for some retailers. Oil, on the other hand, is rising after OPEC Plus announcing plans to pause output hikes going into next year. And also ahead, struggling Hong Kong developer New World set to issue almost $2 billion in new securities and notes as it seeks to improve its debt profile, and a lot of big interviews coming up here as Hong Kong kicks off an extremely busy week of conferences. Do not miss our exclusives coming out, the top executives at HKX, the UBS Global Wealth Management, and also Primavera Capital.
Go paper call. Shout out to all of our
Good
business
morning.
partners.
Thank you for joining us. Hope you all had a restful weekend. The story, I think the main story going into the weekend, certainly as all lines are concerned, was really the strength of the U.S. dollar.
Coffee. 223 of medium after iced coffee?
Yeah.
This coming from. And here, when it comes to WC,
Top of the morning.
there's a great survey that came out, right?
Have a blessed day.
Breaking the glass ceiling. I'm talking about 45%
You are the secret to my
of
success.
the top financial sector roles actually go to women here in the city. And that certainly is a breakthrough for some of the women that we're about to talk to. The co-organizers of this event, Hong Kong Exchange's Bonnie Chan, as well as UBS's Amy Lowe, is going to be joining us in the next 2 hours to talk about this event. And certainly, it's not just that. We're talking about Hong Kong FinTech Week. Our very own Annabelle Jewelers is covering that from the Convention Center. Bell, what's going on?
Yeah, that's right. I mean, you're saying it's getting noisy there. It's just starting to fill in as well because, as you said, this is a major week for events here in Hong Kong. It's actually the 10th anniversary of the Hong Kong FinTech Week as well. So Hong Kong, of course, really making that push to be one of the global hubs for Web3 and crypto initiatives. But again, here today, we've got a very big interview lineup coming up. So we're going to be speaking with Fred Hu, for instance, from Primavera Capital. He's coming by in the next hour to talk about the outlook for PE, but also the outlook for US-China relations. That's a big focus. And then just ahead as well, we're going to be speaking with Dwayne Huang from Chiming Ventures, and that is, of course, a VC fund, US dollar denominated, but looking to raise millions and millions of dollars of capital right now. So lots of big interviews ahead. These are exclusive. You can see there Fred Hu joining us in the next hour.
Fantastic team will be with you guys shortly once we have those interviews coming online. Of course, we have the team on the ground, busy, extremely jam-packed week as far as conferences go here. In Hong Kong, Bell there, of course, at FinTech Week. And in case you're wondering where Yvonne is, of course, she's at the Exchange as well there for some very big interviews coming up. In the meantime, though, let's get to the latest here as far as news goes. It's been, obviously, we're coming off a very, an extremely manic week in South Korea. Going into the weekend, the dust has settled. We now have more information. What was agreed on, what wasn't. The White House says, here's the thing, that China will effectively suspend the implementation of additional export controls on rare earth metals and also terminate these investigations targeting U.S. companies in the semiconductor supply chain. But Treasury Secretary Scott Bessent cautions that allies will still need to be wary.
These have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
As we enter the AI supercycle, how do you build the infrastructure to deal with the massive explosion in data traffic that AI will bring? How do you make sure that AI doesn't break the internet?
Right, Min Lo, our China correspondent, is here with us on sets. We're getting more details on what the U.S. and China had agreed upon. What else do we know from this? There's a fact sheet, I think, that's out of the White House.
Yeah, the U.S. White House has released a fact sheet of what was agreed upon. And bear in mind, we only have the U.S. version of this. The Chinese side hasn't yet released their version. But according to the U.S., China is going to suspend these export controls on things like rare earths, antimony, graphite, gallium, germanium. And it's going to undo the measures that were imposed not just in October this year, but also April of this year and October of 2022. So that's a massive victory for U.S. national security. And aside from that, China is also going to end investigations into U.S. chips companies, including the likes of Qualcomm, NVIDIA, for example, suspending some of those countermeasures that they have imposed, both tariff and non-tariff measures, since March 4th. And this means those tariffs on U.S. agricultural goods are going to be lifted. They're stemming the flow of fentanyl into U.S. in exchange for a lowering of the fentanyl-related tariffs by 10%. purchase commitments on soybeans, 12 million metric tons this year, 25 million metric tons for the next 3 years. What are they getting in exchange? The US is agreeing to suspend that 50% rule, meaning they're going to roll back the expansion of the rules around the entity list that had applied to the affiliates of companies, at least 50% owned by companies on the entity list. And aside from that, extension of that trade truce for another year. So what else is not discussed is the TikTok deal, right? The US has a plan to divest that. We haven't gotten a formal approval from Beijing yet. And of course, Taiwan, Ukraine war, purchases of Russian oil, that wasn't really discussed at the trade talks.
Min, thank you so much for a wrap of what was discussed, agreed on, and of course some of the items that some people say were on the table, but obviously on the backside of that, not really. Maybe we'll get to that another time. Right. Okay, let's bring in our first guest on the show today, Tsinghua University Director and former KVOC advisor, David Daokui Lee. He joins us from Beijing. Professor Lee, thank you so much for joining us. What a time to be speaking with you following that historic meeting last week between the two presidents. Just give us your top takeaway. What do you think how big of a success was it in your opinion?
I think among all the meetings between the two leaders, this one is perhaps the most important. It really historical. Why? I think fundamentally the most important progress for both sides is for the U.S. to recognize China as an equal peer, as an equal partner to talk about things. So in fact, President Trump used the phrase of G2, which was used by President Obama many years ago. So this is a big progress. That means two implications. Number one, there will be bigger talks, not only on trade, but also on security issues, on Ukraine, on Taiwan Straits, on South China Sea and Middle East between the two countries. And number two, trade issues, financial issues will be discussed. And in this big picture view, trade issues and financial issues, technological issues are, frankly speaking, small potatoes, and they will be resolved. So there is a sense of enthusiasm among my colleagues in Beijing. In fact, in a formal dinner gathering, that's the mood of top thinkers in China.
Professor, fantastic for laying out the context for us there. Some of the, I guess just to borrow maybe the analogy you used, most of the low-hanging fruit were discussed, the small potatoes, as you were pointing out. The next 12 months seems to be, the sky's perhaps the limit for what they could be seeing progress on. Talk to us about those bigger items. What sort of progress do you think we should realistically expect when it comes to the likes of Ukraine, for example, or Taiwan?
Well, on the issue of Taiwan Straits, this is by far the most important issue or biggest concern of the Chinese side. So I think it is not unrealistic that under President Trump, the U.S. administration, as well as the whole U.S. Capitol Hill, make some new rhetoric about the Taiwan succession issue, which is the big concern of the Beijing side. And in return, the Beijing side will cooperate with the U.S. on the issues of Ukraine, will agree to be more proactive in pushing Russia, for example, to the negotiation table. And our Middle East, China can play and will play a bigger role. So I think these are the big issues. And on trade and finance, the Chinese side can agree to buy right away massive amount of American agricultural products and crude oil. And also, I strongly believe China can even give zero tariff rates on Detroit manufactured automobile. Why not? Why not? China is ready for that. That way, the President Trump can claim victory domestically before the midterm. So it's really a very good meeting.
David, you highlight a very sort of optimistic sort of path forward for the two. I wanted to ask you about the fact that there was no mention of these sort of NVIDIA Blackwell chips. There was a lot of speculation leading up to this trip that Trump was going to bring this up to Xi Jinping. when it comes to tech supremacy and the like, do you think 1 year is enough for China to reduce that chokehold it has on U.S. semiconductors, and at the same time, can it actually be quicker than the U.S. breaking its dependency on China rare earths?
Well, the rare earth issue is actually tricky. It's more than technological issue. It's an economic issue. That is whether the new startups, right, the startups in manufacturing, distilling rare earth in the U.S. or other countries will be economically profitable. Until you see that, it's hard to realistically find replacement of Chinese export of rare earth. The computer chip issue, I would give the Chinese at 5 years. If the current situation continues, if the U.S. continues to restrict its export of computer chips to China, I would say in 5 years. I mean, I believe I'm a bit conservative on this, on my estimates. 5 years, China will do it, because look at it. The computer chips is based upon a technology which is not progressing very fast. 2 nanometer perhaps is the limit of the computer chip production. That's the limit. Okay, so China is chasing a fixed target rather than on AI. AI is a moving target. So I am optimistic that U.S. side, starting with Jensen Huang and NVIDIA top executives, know this very well. So the best strategy for the U.S. side is to relax its trade, its export of computer chips, therefore slowing down the incentives, lowering the incentives, and therefore slowing down the Chinese pace of catching up.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
It seems that the gladiators get a lot of positive social sentiment.
Innovation changes everything. One ETF, 100 innovators remaking the world. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more. Prospectus at Invesco.com.
Yeah, and it goes with what we heard in that 14th five-year plan, David, of really trying to create China into this tech-driven industrial superpower. I wonder, that does come at a cost, right? That, the money that has been spent on subsidies and the like to really building that self-sufficiency within the tech sector comes at a cost of boosting consumption, for example. Do you think at some point the economy is going to have to pivot towards boosting consumption once again?
Absolutely. Okay, I think right now, as it is, the top priority of top decision makers in China is the technological self-sufficiency. Okay, that comes to the area of security. But don't forget, the biggest economic security is sustainable and reasonably fast pace of economic growth. Because without reasonably fast pace of economic growth, the issue of youth unemployment, the issue of public finance, the issue of continued increase of disposable income, and therefore happiness of the population will be built on sand. So therefore, I think before too long, Chinese policies will be jacked up towards boosting domestic consumption. And talking about domestic consumption, there are millions of ways to do it. Economists like myself have been busy proposing various plans, and we are confident that down the road, all these proposals will be implemented one way or the other.
You are the secret to my success.
Okay, well, with this largely not completely out of the way, so we're talking about, of course, the negotiations with the U.S. side. David, I wonder then, what are the other major issues, foreign or domestic, economic or otherwise, that you think leadership now has more time to focus on? What are the big issues confronting China these days?
Well, in my mind, the biggest issue, which has not been widely recognized in among the top circle, I think they will. Okay, is by far the local public debt, local government debt, which is huge by international standard, which is around 100% of GDP. However, However, if you put local government debt in the context of the whole Chinese economy, considering that the economy has a super high savings rates, and also the central government has very little amount of debt under its belt, only no more than 30% of GDP, and also considering that the central government has huge amount of financially valuable assets in the shares of the largest commercial banks and the mobile phone service providers and also conglomerates. So the issue of local government debt can be easily dealt with. I've been proposing the idea of increasing the issuance of central government debt in the amount of 50% of GDP and use the money of the debt issuance to swap out local debt, and therefore giving local governments more life, giving them less burden of debt. Therefore, they can spend more. They can pay their delayed payments to construction companies, to their employees, and therefore the whole economy will be on a higher model of economic growth. By the way, if you look at the Chinese statistics very carefully, the Chinese economy is only running at 4.1% at nominal GDP rates. And this rate should be 7%, easily 7%, considering taking into account of inflation. The US nominal GDP rates easily is going around 5%. So it is nominal GDP growth rate, which is affecting everybody's life. It is not the real GDP growth rate. Let's keep in mind.
We'll do, sir. Thank you so much for the insights. We covered pretty much everything. David Li Daokui there in Beijing, Tsinghua University Director and former advisor to the PBOC. Thank you so much for the time. Get us warmed up this Monday. Very, very quickly, before we just go into a very short break, the reference rate of the day, you're looking at a currency right now on your screens, 708.67. That's still a fairly strong midpoint coming out of the PBOC. Just keep in mind, right, we're coming off 3 days of relatively strong moves in the US dollar. We're going into the day hitting our head in the 50-day moving average as far as dollar China is concerned. So this might pull us back a little bit and give us a little bit more breathing room from the edge. Right, cutting out to the open of trade, Shanghai, Shenzhen, and here at Hong Kong. So we're 10 minutes away. Futures are pointing slightly to the upside. Last we checked, this is the China Show.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
Progress is a process. Pushing ahead, pulling back, until everything changes. Today, we're on the verge of another transformation. A digital economy powered by blockchain and AI. Progress is here. Where it goes next is up to you. Be relentless. Galaxy.
Right, welcome back. We're looking at commodities markets early this Monday. So we talked about gold and the tax break there, and the news of the tax break in China. Oil, of course, and OPEC+. In fact, let's bring in our oil reporter, Nicholas Lua from Singapore, for us to talk us through the logic behind the halt from OPEC. Nicholas.
Good morning. So the short version really is that OPEC is preserving its optionality as it moves into the end of the year and the start of next year. As it is, we've already added 137 barrels per day for the past 2 months and for the oncoming month in December. So there's a lot of supply at a time when demand is uncertain and there's plenty of supply. And so that's the uncertainty we're facing moving into next year. This is a way for OPEC to keep its options open as it navigates the uncertainty of Russian sanctions and all the other wildcards that could potentially hit oil markets.
All right, very quickly, what does this mean for this struggle for market share?
So, as you know, David, OPEC Plus has said that it's fighting for market share, and that's the logic governing its past big supply hikes. But at the same time, I think it's clear that not everyone has barrels to add. So Saudi Arabia still has barrels left to add, but its co-leader Russia, now a lot of its supply has been affected by all the Ukrainian drone strikes. And so that picture's a little uncertain. They're not giving up the fight. They're just being more cautious as we move into a period of lower demand. That's what the first quarter is traditionally known for.
Nicholas Lua, thank you so much. A wrap of OPEC and oil as we get started as far as this week is concerned. We're looking at futures right now, 26,000 on the Hang Seng Index, the first iteration of the week. Plenty more ahead. This is The China Show. Welcome back. Good morning. So you guys like nice round numbers, right? So 1.8% is the level that we dipped below that of the 10-year yields following the rally, of course, that's taking place. The CGB market, New World out with some issuance here, maybe the rejigging of the maturity of its debt profile. We have massive events, of course, this week, as we talked about. We have the Rating Dog PMI survey that's coming out in about 20 minutes or so. And within the sectors to watch today, casinos are doing well in the pre-market. Good data coming through. The opposite there are the likes of gold stocks, at Zijin Mining, Chow Tai Fook, names tied to the gold story. Seeing some pressure early after China, of course, ending the gold tax break and this pullback we're seeing in gold prices. Trendline support is in focus following the drop, and it's looking like we're going to get a bounce from that level today. This is The China Show. Good Monday morning. Welcome back. You're watching The China Show. In case you missed that, one of our first interviews of the day with Professor Li Daohui out of Beijing. Interesting takeaway from him. He said the most important achievement or milestone from the meeting last week between the two presidents was that now it seems, when you look at China and the U.S., on equal footing, right? President Trump, G2. So it does open up the door, he says, for the two sides to discuss the bigger issues, Ukraine, Taiwan, over the next 12 months. And watch those two things over the next 12 months, apart from obviously other things of, taking the barriers down to trade and access to key markets and key technologies going into the open today. We'll replay the part of that interview later on if we do have some time. Going into the open today, it's worth pointing out that it's going to be an extremely busy, again, conference week. Yvonne is at the exchange for us for an event. It's Hong Kong FinTech Week. Tomorrow, Yvonne and myself will be at the Hong Kong Monetary Authority's big event at the newly crowned best hotel in the world out of 22 properties. Okay, that's the Rosewood. We're looking at the CSI 300, as you can see, flat at the start of trade. Have a look at Hong Kong, please, if we can. And just keep in mind, right, a very big decline going into the weekend here. We are getting somewhat of a bounce, not completely to offset what we did get on Friday, 0.5%. Most of the big tech plays are moving toward the upside here. Xiaomi's getting a bit of upside at 2%, in case you missed it. Light, a bit of banter between President Xi and, of course, President Lee in Korea, giving him, of course, a Xiaomi phone. You can read about that on the internet if you do have access. Okay, let's have a look at where we are as far as casinos go. So back to data. Really good numbers coming out of Macau. As you can see, substantial gains out of the casino plays right now going into the first session of the week. Gold plays in focus. You had the tax break being ended, the rebate, of course, and we are getting a decline across gold, spot and futures and equity market iterations of that coming up on your screens very, very shortly, including some of the ETFs traded in the onshore market. So last we checked, gold was right below the 4,000 handle. As expected, we are getting a pullback across some of the gold-related names there. Very quickly, we're looking at this trading debut today. 100% last I checked. 98%. What is it doing now? Oh, okay. I'm sorry. Short change of that. 106% for Mining Lab Tech. This is the trading debut, of course, here in Hong Kong today. And this really ushers in almost a curtain raiser. Let me just pull that back a little bit as far as the big week of listings. We talked about conferences listing. is concerned. So, there's a massive one taking place on Wednesday, and of course, November 6th as well is a big day to watch. That Thursday where you have Pony AI and WeRide. You have pricing tomorrow for those two, and of course, the trading debut itself coming through on Thursday. And just finally, just a quick glance at really how blockbuster this year has really been. Check out these numbers. Nearly 80 listings. Obviously going to get more as we enter the last 2 months of the year. Nearly 30 billion in funds raised, and turnover has picked up. And a lot of that, by the way, has come down in the form of the Stock Connect, 260 billion, the Hong Kong dollars. So it's quite a significant milestone, Yvonne, for the HKX. I wonder what they say about this, Yvonne.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
At Mizuho Americas, we know this course. And this one. And this one. And definitely this one. We know them well because we're experts in banking and global markets. Mizuho Americas, a name worth knowing.
Yeah, they are also one of the co-organizers of the inaugural Women Chief Executive Summit that is underway here in Hong Kong. And I'm pleased to bring in Bonnie Lachan here, Hong Kong Exchange CEO, as we're talking about, right? Nearly $28 billion in terms of total proceeds this year. That's on track for one of the best years we've seen since 2021. For the city, Bonnie, 300 sort of IPOs in the pipeline right now.
Yeah.
So how many more than 300? We also have the confidential filing, which is not covered by that number yet. How are you dealing with the amount of paperwork, I'm guessing? Do you have enough manpower right now dealing with these applications?
We do. In fact, I'm quite pleased, and certainly I thank my team for keeping up that spirit and the momentum. We are increasingly trying to find ways to empower the team with technology, and in fact, we have been exploring, for example, the use of to help speed things up. But so far, I think the momentum has been great, and we are now at over 80 completed IPOs, and we're in early November. So let's see what number we can wrap up the year with.
There's a lot of gong ceremonies, obviously, this year, Bonnie, for you. But when it comes to once we get another wave of these IPOs, again, we're talking about 300 in the pipeline. Are you concerned that a big chunk of that money is going to be taken away from the equity market?
Sorry.
Are you concerned that the liquidity issue, that there's going to be a big chunk of money that's being taken away from the equity market?
I see. Not at all. In fact, what is really pleasing this year, it's a return of international investors. So if I look at the IPOs which have been done to date, many deals we are seeing over half, and in fact some deals are even close to the 70-80% mark, representing international investors returning to the Hong Kong IPO market in earnest. So long, I'm personally very confident that so long as we're able to present investors around the world with the right opportunities, the money will come.
Yeah, I just came back from South Korea. I just came back from the Saudis. And certainly we have a lot of takeaways from both these trips. But the fact that the U.S. and China have reached a truce for 1 year, what does that mean for Hong Kong in terms of the outlook now?
Yeah. Well, I think if you dial the clock back 3 weeks ago, people were actually worried that maybe the leaders are not going to meet at all, which obviously turned out to be not the case. And I guess, what I focus on at HKD is really to make sure that regardless of market conditions and these trade talks and the geopolitical situation, we provide the investors around the world with a resilient market, an orderly market that they can trade. Now, I think, with the talks continuing, it's a truce for now, like you said, things will pick up again. Hopefully, we continue to have that, very trusted market so that regardless of how investors want to take that decision, they can trade.
And the height of things were quite tense. There was this threat of Chinese companies being delisted in the U.S. And maybe people were hoping that Hong Kong would be that place that they can seek some refuge and the like. There was a bit of pressure earlier on this year about easing these so-called dual-class shares, and that the need to kind of prioritize that. Is there less of a need and urgency now, given that we're in a truce? Well, I think the way you put it, the focus would be on the push factor, right? Because, companies are worried about delisting risk. I tend to focus on the pull factors, the attraction that Hong Kong is capable of providing, which is, first of all, right, the access to global capital. But more importantly, and that's our secret weapon, as you know, is the Connect franchise, whereby companies listed on our exchange is capable to tap the very strong southbound flow of capital from the Chinese mainland. That sets us apart from other exchanges. So I think, and you have seen obviously the southbound volume since the beginning of the year has stayed very, very strong. And so I would say that, regardless of the geopolitical situation and whether or not those threats are real or not, I do trust that the Hong Kong is able to present a set of pull factors whereby companies will really see the merit of getting a listing on the Hong Kong market. Are companies willing to alter their company structures just to fit the city's limits still? Are you seeing that? Well, I guess for that particular issue, companies will have to think about their own needs. And frankly, for corporate governance matters, shareholders have a say, right? Whether or not they're willing to accept a particular kind of company structure, or whether they would like to see more, a company where, shareholders have a more equitable say. I think it is for the investors and the companies involved to decide for themselves. Now, on our part, we have introduced weighted voting rights since 2018, which is now 7 years ago. I guess, through our interaction with a lot of market participants, we do believe that maybe that's something that we can revisit and see how, we can continue to improve our listing regime, just like how we've done in other areas. Okay, so there are conversations now in terms of possibly reviewing this. Yeah, I think early stages right now. I think over the past when we engage the market on various topics, this is one area where they have mentioned that they would like to see perhaps some revisiting. There's also the latest rules in IPO allotment mechanism, which some had said it makes it almost impossible for retail investors to get a share of these IPOs, and really the dry supply takes these IPO prices quite high as well. And I think the SFC has talked about we need to address this. How are you looking at this sort of issue? Well, the purpose of that exercise, or the revision to that rule, was really to come out with what we believe a better price discovery mechanism. Now we know that in an IPO, in the context of an IPO, retail investors are mostly price takers. We really wanted to give the issuers who are listing their company, as well as institutional investors, a stronger bargaining power, so that through that bargaining, hopefully we will come up with a better price, which will be longer term sustainable. Now, obviously very difficult to draw sort of a causal relationship between the two. Yeah. But I would say since the introduction of the new allocation rules, the aftermarket performance of the IPOs have actually fared quite well. So we will continue to monitor. Yeah. But I would say that at least for now, what we set out to do, we believe we have achieved. Okay. Of course, it's the inaugural woman chief executive, so we can't leave without asking you a question about diversity and this sort of survey that came out with 45% of top financial sector roles go to women here in the city. That's quite a milestone in itself. What do you think is still needed to do? What's your next sort of aim when it comes to diversity? Yeah, I think as a member of the WC, I'm extremely pleased to see the results of the report. It is a very good set of data, and I think in Hong Kong, there is still a lot to do. As you know, HKEX is one of the first global exchanges around the world to introduce a mandatory ban to single gender. That was 2 years ago, and so I'm very pleased at the beginning of the journey. We still have 800 out of 2,600 listed companies with a single gender board now. That's basically eradicated. What I think we still need to do more is to build the pipeline, the female directorship pipeline. Occasionally I hear that, people, you mentioned that, when they go out and try to, fill board seats with women, they're not seeing that, churn and sort of great momentum yet. But I'm confident as we continue to bring more directors, more female directors into listed company boards, the churn will begin. And I think that is another big step forward in terms of promoting gender diversity in Hong Kong.
It's great to have you as always, Money Chan there, Hong Kong Exchange CEO, joining us here at the Hong Kong Exchange. Of course, as we've been talking about, we're going to have more executives from the Women Chief Executive Summit in Hong Kong later on the show. We speak exclusively with the boss of UBS's Hong Kong and the bank's Global Wealth Management Asia Chair, Amy Lo. She's also one of the co-organizers of the event, Dave.
Yeah, absolutely. Stay tuned for that. And of course, the conversation Sivana's there at the event. Now, speaking of, let me just borrow that phonetic, low, and take a look at what's happening in the Philippines. We're reaching the lowest level here going back to 2022 on the Philippine Composite. We're now, the Philippine Stock Exchange Index there. So we're down the most since Liberation Week, first week of April, and we are extremely close. I'll show you a chart in a moment here. Extremely close to falling to the lowest levels last seen during the pandemic. Big miners and some of the big financials leading these declines. Just about everything is down with the exception of less than a handful of names in Manila. And here's the chart for you guys. Yellow line is the one you want to watch. That's the trough in 2022. As you can see, we're very close to taking out, I think that was September of 2022. Below that, we're back to levels last seen during 2020, during the pandemic. Plenty more ahead. This is the China Show.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
Sir, it seems that the gladiators can rely on positive social sentiment.
Innovation changes everything. With one investment, you can access the last 100 innovators who are rethinking the world. Before investing carefully, you can consider fund investment objectives, risk, charges, expenses, and prospectus at Invesco.com.
All right, welcome back. You're watching the China Show. So the conversations around. So here's the thing. The dollar was not supposed to be one of the main events last week. It then became one of the key components of this market. They're following the repricing. So you had the Fed decision. You had the press briefing from Jay Powell, who effectively said December is far from a done deal. Bond markets had to reprice that. The dollar is on 3 days of fairly decent strength, and the probability for December has gone from over 100%, so that's more than a 25, and then some more, down to about 65. Currently 70% based on, I think this is Fed fund futures, not swaps. There we go. So how do we look at this, given the data that we have, or the lack of it, if you think about it that way, following also the conversations we had last week between the U.S. and China, and how this opens up, maybe removes a level or two of uncertainty given the economic outlook. Joining us here on sets, Randy Costner, professor of economics at the University of Chicago School of Business. You might also know him from his previous time at the Fed. Nice to see you. Good morning. Great to be back. So let's start with the Fed. The lack of data, official data, there's a shutdown that's taking place. I wonder how that affects decision-making dynamics, given the uncertainty out there.
It makes it much more difficult to sort of come to consensus because the data aren't there. So people can say, well, I think the trend from what we saw a few months ago is still continuing, let's say like weakening of the labor market, or other people can say, no, I'm seeing anecdotes and saying that it's not. So it's much more difficult. Unfortunately, what this means is they have to kind of go by vibe rather than data. They always used to talk about being data dependent, now they're kind of vibe dependent.
Right.
Well, that applies more to dating than it does really monetary policy decisions. If you think about it, when you try to look for the right. So, what do you think happens in December? Is the best course of action to do nothing, or is an insurance cut perhaps more a wiser option?
Well, hopefully we'll get some data by then. I really hope that we might be able to. They should be able to backfill in things like the employment numbers,
Right.
Or at least some of the employment numbers. Probably will just miss the inflation numbers, but hopefully we'll have another round of inflation numbers, and then that's really what they should be looking at. Right now, it's really tough to tell because it really is down to, well, what are the anecdotes? Certainly, we're starting to see more anecdotal reports of layoffs, of reduction. So that suggests that the trend that we were seeing from the last date of the official date of the week may be continuing weakness in the job market.
Right. It doesn't seem though that we're about to turn a sharp corner in the U.S. economy. The fact that there is a healthy debate that you could make the argument, a strong argument either way. How low do you think rates can or should get in this cycle?
That's always that's a very important, very, very important issue. And so, the Fed has moved its assessment of where that kind of long-run neutral rate would be, when it's neither expansionary nor contractionary. And so, I think they think that there's obviously a difference of opinion from the reports that they put out, but I would say sort of it'll get into the low to mid threes. Is kind of probably where they would end up, but that's really dependent on so many different factors that we just have the data on now.
Right. The issue of Fed independence. Where's your head at that at the moment? Just given how you've seen voting, of course, taking place, and where do you think that conversation goes?
So the Fed's still doing what it thinks is right. I think Jay Powell is in charge.
Economy.
Yeah. Okay. Yeah, and I think Jay Powell's clearly in charge. I mean, obviously, in this most recent round, you had a dissent on both sides. One who wanted to raise rates. Keep rates steady. Another who wanted to cut rates more. I think that's perfectly reasonable. I think that's healthy to have people have expressed their different points of view. But I think Jay's still running it as calling it as he sees it, and I think it's reasonable for him to say, I can't make any commitments about December because I don't have any data.
Okay, well that's fair, unless he's going on vibe, right? Okay. There's been a substantial amount of progress on tariffs, but also we've had substantial amount of tariffs already put in place. When do you think we'll get the pass through as far as inflation goes, or do you think the companies will take that hit?
Well, see, it's just even if you had a full 20% increase in tariffs. Imports are only 14% of U.S. GDP. Okay. So 20% of 14% is 2.8%. So assuming that no one shifts to cheaper products, which of course people do, the maximum impact is going to be 2.8% on the level. And we're not seeing a trade war breakout, so that's sort of a one-time, one-off kind of thing. This is something that Chris Waller, one of the governors, has been talking about for a long time. I've been talking about this since the beginning of the year, and so that's why I don't think that the tariffs in and of themselves are going to have a very big long-term impact on inflation. Certainly, we're seeing that we've had this glide path down. Now it's kind of flattened out because you have some impact of the tariffs, but not an enormous impact.
I want to get your thoughts on this. There's a extended pause between the discussions with the U.S. and China. It looks like they'll be revisiting that next year, and it's possible that they could be doing this at a cadence of 12 months. In other words, every 12 months they negotiate terms. Do you think that adds a level of uncertainty for businesses, or do you think this is the sort of best new normal that we're going to get?
Well, I think obviously in April, markets were kind of freaked out about what was going on with respect to tariffs and dealing with a lot of uncertainty. It now seems that when there are different announcements, sure, there'll be some movement in the markets, but they don't seem to be nearly as tumultuous as they were before. So I think business people are just getting used to this kind of baseline level of policy uncertainty being higher than it was before. But it took a while for them to get used to it.
Since you're in this part of the world, I want to get your thoughts on the Chinese economy. Just a broad question here. They've had some challenges in trying to get inflation up in the balance.
Yes.
Is there something that you think they should be doing more of, or something new that they should be endeavoring, or do you think it's just a matter? Have we just not waited long enough, I guess, for things to bear fruit?
Well, I think there are uncertainties about the tariff impacts and trade impacts on the Chinese economy. So I think they're a little bit of wait and see mode to see how those sorts of things work out. There's obviously some uncertainty about domestic demand, although that seems to be coming back a bit. And I think the People's Bank really hasn't changed interest rates or reserve requirements since May. And so I think, they should be looking to see if we continue to see some downward pressure, maybe they need to do further cuts. But right now, the economy seems to be okay. And so I think they're kind of in a wait-and-see mode, partly because of the trade issues.
Right. With good reason. Randy, it's very nice to see you. Have a great rest of your trip here in Hong Kong. Give your students a hard time, please. Okay. Fantastic. Randy Crossan, the former Fed governor, of course, he's in town here for the University of Chicago. He has some classes to get through. All right. There's plenty more here on the China Show. Market update is coming through in a couple of minutes. Good Monday morning to all of you. Right, welcome back. Just very quickly, we're getting some data coming through. This is the private PMI survey. This is obviously for October. Following the miss on the official numbers, this one actually coming in not as far from estimates, the median estimate, but it's worth pointing out there was no mode given that there were individual forecasts all over the place. 50.7 is basically your quote-unquote benchmark here. All right, we'll leave it there for now. A brief look at some of the movers across these markets. We're looking at autos coming up on your screens. There we go. Not a lot of movement there. The massive trading debut today. Last we checked, 107% on Mining Lab Tech. That's the debut here in Hong Kong. Ooh, 4 percentage points better. And look at the benchmarks going into the first 25 minutes of the trade. Volumes are largely on the lighter side of things across the region. Japan cash markets are, of course, shut. We're mixed across A and H shares. Plenty more ahead. You're watching the China Show.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights,
Hong
and
Kong.
solutions to reveal new
I need that card in Japan.
Barclays, power impossible.
Mauricio tells Rami she's going to be on the second plane behind me. After my plane lands, her plane should be landing. Put that car in the following airport. Put it next to the Ascendant. That one's going to be up.
Welcome back to the China Show. If you hear that getting loud, well, yeah, it's going to get very loud the next few days here in Hong Kong. A busy week of events here. We just came off coming off a plane in Busan and in Gyeongju in South Korea after those Trump-Xi talks. And now we're talking about the state of financial markets and, of course, the financial hub of Hong Kong here this weekday. So certainly we're right here live at the Hong Kong Exchange for the Women Chief Executive Summit, the inaugural event. Today, we're also going to be heading to FinTech Week there as the things kick off there as well, Dave.
Yeah, you have a lot of big conversations coming up. In fact, with Yvonne in a couple of minutes, or Amy Lo will be joining her there at the HKX, and then she hurries off from there to the FinTech Summit. It's been exactly a week since we launched a new set, and the only thing that so far has not been a feature of the new set is my co-anchor Yvonne, who's been here for about a day and then ditched us to do other better things. But I promise you, maybe we'll get Yvonne back here on set with us in a couple of days. There we go. Not tomorrow, though, because as Yvonne is pointing out, there's another big event taking place. It's the HKMA Financial Leader Summit, where, including myself, will be ditching the set and headed to the world's #1 hotel out of 22. That's the Rosewood, of course. That's where things are taking place tomorrow. Anyway, let's have a look at where we are market-wise. So as we were pointing out, and Yvonne was mentioning there, we're coming off lows in the day on the Hang Seng Index. We're slightly higher there. We're coming off quite some steep declines on Friday. Two other market stories today in the equity markets. One is Korea, this massive K-pop we're seeing there, pun intended, but also quite literally because of what's taking place in that space. And the Philippines is off about 2%. We're coming off lows of the session, but massive gap lower there that could be still down to this confidence crisis around what's been going on there with the flood control projects. We'll try and figure out what's going on there. But at these levels, we are at the risk of falling to the lowest levels last seen during Rona. Okay, let's have a look at gold and gold-related stocks coming off, and quite substantially off. There we go. Everything from miners to some of the jewelers, so a lot of the ETFs following the rebates, China ending the tax rebate in gold. So it's playing out across these markets. And casinos are going the opposite way, following some decent numbers coming out of Macau, above expectations. And casinos, last we checked, are actually doing very, very well in the first session, with the exception of Galaxy, which is coming off. But yeah, some of these names are also punching above the benchmark today. Yvonne.
Yeah, let's continue our coverage here at the inaugural Women's Chief Executive Summit. And we're talking about little wealth management, the live private wealth. It's quite interesting as well. Our very own Sharni Wong from Bloomberg Intelligence was crunching the numbers, and they were talking about private wealth under management could nearly double to 2.6 trillion by 2031, and Hong Kong could actually surpass the likes of Switzerland in being the global cross-border center this year. Let's bring in Amy Lau. She'll know a little bit more about that. She is the UBS Global Wealth Management Asia Chairman. She's also the UBS Hong Kong Head and Chief Executive. She's also a co-organizer of WCE. So you wear many, many hats, Amy. Thank you so much for joining us.
Oh, thank you so much, Yvonne, for having me.
Yeah, let's talk a little more about inflows, right? Asia Pac was very strong in the third quarter. How much was that contributed by Hong Kong and China?
Oh, actually, we had, if you look at the third quarter result announcement, we have a very strong quarter. Globally, we surpassed $6.9 trillion. As you said, Asia Pacific is one of the main contributors. We surpassed at the group level for Asia Pacific 1 trillion asset, and for wealth management is over $870 billion, and the net new asset is $37 billion.
Wow.
So a very strong inflow.
How much did that come from the mainland side of the business?
It's quite diverse from different parts of the Asia-Pacific region. Obviously, China remains to be the fastest growth region and the wealth creation region as well.
I mean, certainly the Chinese market, this stock rally has been a standout this year. Are your clients still willing to raise their exposure in this market still?
Definitely, because other than the AUM, we also have a record trading volume. And as a result, also record trading kind of revenue as well. And I think, obviously, with the capital market activity picking up, we have also seen the sentiment change, and clients want to further increase the allocation to both China as well as US. And that also synchronized and echoes very well our CIO view. Geographically, we like China and also US. US because, with the rate cut and also the AI topic and also the announcement, the result announcement so far has been quite positive. And China, obviously, is driven by the tech sector. So we have seen increasing interest in also allocating more into the Asia-Pacific region.
What sort of risk tolerance do clients have now? I mean, after we've already seen records hitting a lot of equity markets, the ones that you just highlighted there as well. Are they willing to lean more into risk? When asset classes?
Yeah, if we talk to the client, obviously diversification is the key, and how you diversify across the different asset classes, jurisdiction, and that's the reason why, in addition to the trading kind of activity, they are also interested in alternative. Gold remain to be also one of the very popular asset classes.
Yeah. Is that still a defensive sort of play, or do you think? I mean, sometimes gold acts as a risky asset these days too now.
I think it's a little bit different because now they use it as also a diversifier into the different asset classes. And so they also take the advantage of the correction to also add in some of the gold position. And the central banks are still buying gold.
Yeah. When it comes to the momentum, though, do you see signs that this strong inflow can continue in terms of sustainability of it all, or do you think that there's some sort of let-up in sign?
Oh, if you look at the SFC number, they just also announced a number for Hong Kong. We have also seen the AUM growth last year, 13%. And if you look at the net inflow, it surged by 81%. So we have seen also strong inflow into the Hong Kong both asset and wealth management. And I chair the Hong Kong Private Wealth Management Association. The fact that we have also 15% growth in our corporate membership speak for itself.
Sounds like you need more people. Are you looking to hire more people when it comes to catering to that whole sort of wealth that you're seeing in Hong Kong and mainland China too?
We've been hiring, and our GAP and also the board were in Hong Kong, and certainly they were very impressed by the franchise that we have built. And obviously, we will continue to hire strategically out in the region.
How much could headcount grow, do you think, in the region?
I think just for Hong Kong, we hired over 50 bankers for this year so far.
Do you have any targets in terms of what you would like to?
As I said, we will continue to hire strategically.
I was going to ask you a little bit more about Singapore too, because UBS obviously was among some of those banks that got caught in this money laundering scandal a few years ago. What's the bank doing to really streamline this whole process of vetting for your clients now as you move forward from this?
I think for us, in Asia Pacific, both Hong Kong and Singapore are important hubs. And obviously, we also comply with all the kind of onboarding requirement, the due diligence, no matter in Hong Kong, Singapore, or in any other location in the Asia Pacific region. And I think that's also the reason why we have to leverage on AI and technology to streamline some of this onboarding and doing due diligence. And it has been working out very well because at UBS, we also built the AI factory to make onboarding, investment suitability, and also the client conversational insights more seamless.
Yeah. Has it hurt the whole reputation of Singapore as a safe place for Chinese wealth to park at? Do you think that sort of image has changed or lost a bit of its shine here, or do you still see new wealth coming to the city there?
As I said, Hong Kong and Singapore are important hub, and we have also seen both growth in Hong Kong and Singapore, plus other geographic, other Asian market, because other than Hong Kong and Singapore, we are also growing some of the established market like Japan, Australia, Taiwan, because Taiwan, they have also piloted the Kaohsiung as a wealth management hub.
I was just excited. Yes, this whole new wealth there. Yeah.
Yeah, actually, we have also a very strong Asia Pacific wealth management team in Switzerland. And we have also seen a very, very strong kind of growth out there as well. So, as I said, clients are also looking for diversification. So, it's how are we going to use Hong Kong and Singapore as the important hub, and then continue to grow the established market, Japan, Australia, and also Taiwan, and Switzerland being our hometown market, and also growing the long-term market like China, India.
I was going to ask you about Taiwan. I was just there, and there's so much potential. They talk about it becoming given all these tech companies that have basically accumulated all wealth, and they want to keep it onshore. But there's higher taxes there. It might be hard to retain talent because salaries are not as competitive to Hong Kong and Singapore. What do you think is sort of the potential for Taiwan to be that sort of wealth?
Yeah, as I said, while they are now piloting the asset wealth management hub in Kaohsiung, I think that's a very positive sign. So talking to some of our stakeholders and different partners, like some of the asset wealth management players, they are also considering increasing their kind of.
Are you putting more people in Taiwan now too?
In Taiwan? Yeah. We have a strong team in Taiwan because in addition to the international market, we also have a strong domestic wealth management team down in Taiwan, and certainly we will expand in Taiwan.
I was going to ask you, since you're the co-organizer, you said this is your baby, this event, the WCE. Tell us a bit more about, the survey, right? 45% of top financial roles in the industry are going to women. Why Hong Kong, and why such a high number? It certainly is a big milestone.
If you look at the results, primarily the respondents were telling us it's because of the safety in Hong Kong, the education, as well as the culture that encourage them to lead and also be inspired. And I think the diversity here is not forced, but it's organic. And having such a strong, powerful women network, over 60 women, collaborating together to really drive the advocacy, and also we mentor a lot of the young talent. I think that's the kind of culture we have built that make it so strong.
What's the next thing you still want to conquer then? When it comes to diversity?
I think we are still also encouraging and promoting public and private leadership in this space, and how we can really position Hong Kong as the global benchmark for gender diverse kind of financial center.
I was going to say, it's a big week for Hong Kong. We're talking about all the events happening here. Does this week feel a bit different from previous years? I mean, this whole resurgence in Hong Kong, do you see can continue?
Oh yeah, definitely. Because this week you have the FinTech Week, then the Hong Kong MA Leaders Summit, and the Private Wealth Management Association Summit.
Yeah.
We also will be welcoming 1,200 participants from all over the world to Hong Kong. So I'm sure the momentum will continue. And Hong Kong is a capital market hub. The fact that we have 300 companies lining up to list, and that's exciting. I think the numbers speak for itself. That's why I told you we have also record kind of trading volume, and also the activity out here in Hong Kong.
Do you see a risk to this resurgence in any way?
Obviously, the geopolitical tension, the tariff, but I think it's in the midst of all this geopolitical tension and also the tariff, we still have such a strong kind of inflow. The numbers speak for itself.
Amy, it's great to have you back.
Thank you
Amy
so
Lo
much.
there, UBS Global Wealth Management Asia Chairman, and of course the UBS Hong Kong Head and Chief Executive, joining us here at the WCE event. And of course, if you're a subscriber and want to rewatch that interview, you can watch through our interactive TV function, TV Go. You can also become part of the conversation, send us in some messages or questions to our guests throughout the shows. Check it out at TV Go.
Right, so another big event here in Hong Kong, and we're live at day one of FinTech Week, and we'll be speaking exclusively with Fred Hu, CEO of private equity firm Primavera Capital. In a couple of minutes, we'll get his take really on the meeting between President Trump and President Xi, as well as China's recently concluded fourth plenary.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
Fourth plenary. This is the China Show. Good morning, welcome back. You're watching the China Show, the Monday edition, and Fred Hu will be joining us at those times in case you missed the earlier promo. Cash markets, we don't have Japan today, so we're shut there, so you don't have cash treasuries. We do have, of course, futures trading, and a fairly uneventful equity market session, with the exception of two markets. One is Korea, we'll get to that in a moment. The other one is the Philippines, which is, in fact, the sell-off there is just getting worse as I speak. We'll have a look at the Philippines later on. In the meantime, let's bring Mark Cranfield for some market context as far as today is concerned. MLive strategist out of Singapore. Mark, good morning. Talk to us about Korea. What's not that that's a new story in markets, best performing market this year, but what's going on today?
Yeah, good morning. Who needs Japan when you've got the Kospi firing away as it is? I mean, it's we just had a chart up on Markets Live. You might be able to see it. We're even closing in on the rebound just after the COVID crisis in 2020, and that was a more than 100% bottom to top gain for the Kospi. They're up above 80% already for this one. So this is an extraordinary performance since Liberation Day in April, when the markets really tanked. I mean, we were joking about it during the break there, but it's almost as though the whole Kospi index has become an AI index. You've even got companies like Hyundai, an old school company, even they are getting involved in the AI boom with the help of NVIDIA, of course, they've signed a deal with them to do some work on AI-related factories for mobility with the Korean government. So it seems to be the whole country is encompassing the theme about AI, which has been driving equity markets for most of this year, and looks as though it's going to continue to do so. Just anecdotally, over the weekend, I was speaking to some friends in the fund management industry, and they're all very concerned that we're in a bubble and they're worried about valuations, but none of them are selling their stocks. They're all holding on. So it just gives you an example that people, yes, they see some of these numbers, they think they're a bit ridiculous, it could be getting overdone, but nobody for the moment wants to take the risk of being left out just in case the markets go even further between now and year end.
Yeah, the difference between what you think and what you do. I mean, almost everyone I know thinks that, that last shot of tequila at 3 a.m. is a bad idea, but, most people will still take that last shot. Mark, how do I look at the strong dollar today, 3 days? Are we done repricing this, the December cut around the Fed? It's probably not going to happen. How do I need to be thinking about that now this week?
I think that the picture is being complicated simply by the yen. So the Fed story for December or not is going to play out really with the Fed speaker. We're going to have a slew of Fed speakers coming up in the next couple of weeks. Now that they're able to talk freely again, and you'll probably see quite a few contradicting the stance of Jerome Powell. The fact that he pushed back on December is not going to be what all of the Fed speakers, people like Williams, probably Waller as well. I mean, they're going to have their own views, and they're likely to be a lot more dovish than you heard from Jerome Powell. So in terms of what we see for December, there's going to be a lot of to and fro between now and plenty of time to reprice between now and the December meeting. On the other side, you very much got a yen story, which is not going to go away for some time yet. The fact that dollar yen is continuing to climb, we're getting towards territory where the Japanese authorities will get more conservative. If you look at where we've been, we almost reached 159 at the beginning of the year. That's a possibility for intervention, but more likely they're going to wait until 160 plus, simply because for the moment, the Bank of Japan is not doing its part. This is a two-sided equation. For the Japanese yen to stabilize, maybe even to get stronger, the Ministry of Finance and the Bank of Japan need to be on the same page. They need to be working together. That's what we've seen in the past. That can change the direction of the currency when they're both working to support that. That is not the case right now, and the Bank of Japan really dropped the ball last week. They had an opportunity to set up December for an interest rate hike. They did not do so. Market is very skeptical that they even going to be able to raise interest rates until well into 2026. That's really not helpful for the Japanese currency, which is already suffering because of seriously big negative real interest rates. It's one of the worst cases among the G10 countries, and because of that, the yen becomes a funding currency again. So the story for the yen will help to support the US dollar by product of the fact that people see it.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
As we enter the AI supercycle, latency becomes a currency. And that means the data needs to be processed as close to the user as possible.
So if you want these data centers to be near the people, is it just a matter of build more of them?
No, unfortunately, because where the people are is also where there is no space. So we have to completely re-architect the way these networks are done.
So it isn't just about bigger networks, it's also smarter that's going to be required.
That's right.
People see a fairly directional move there, and so of course they won't want to short the US dollar too much against other currencies as long as the yen is heading in one direction.
Mark, just a final quick thought on gold and the headline: China ending its tax rebate for some retailers. It's obviously causing some equity market declines in the onshore space. But how do we need to be thinking about that? Is there a day two there, or is that just sort of bad news as expected today?
It's good for a knee-jerk reaction. And in the big scheme of things, it doesn't really mean a great deal. Gold was coming off anyway. People who wanted to short gold in the near term probably using it as a good excuse. But in terms of the big picture, where central banks are buying, whether there's long-term retail investing, all of those things will be in place. But in the very near term, of course, gold was getting very overextended, and it's not surprising that it's selling off a little bit.
Mark, thank you, sir. Mark Cranfield. in Singapore for us. Just a note on these markets in Manila. So we're barely an hour into the session. Man, what a session that's been so far here, as you can see over my right shoulder. So we're down about 2.3 now. We were coming off lows at one point about 15 minutes ago and have since re-accelerated that drop here. So we're now at the lowest since 2022, and we're very close now to taking out the low that we hit back that year. Below that, we're back to levels last seen during the depths of the pandemic back in 2020. Quick glance at the biggest movers there. Everything with the exception of one or two major constituents on the Philippine composite are down, and just some of the big names there, everything from San Miguel to BDO Unibank. Plenty more ahead. This is the China Show. Good morning. Right, so welcome back. In some corporate news we're tracking this morning, the U.S. says Beijing will take steps to allow the Chinese facilities of chipmaker Nexperia to resume shipments. That's confirming a Bloomberg report from a day earlier. But the company is a Dutch semiconductor firm with facilities in China, and the move is expected to ease worries among auto manufacturers over in Europe. Now, the Australian lender Westpac reported profit in line with estimates. It's thanks to growth in mortgages and also some loans to businesses. CEO Anthony Miller has worked to overhaul the lender since taking over back in December, now reshuffling senior management and cutting jobs to reduce costs. Now, Westpac also sold its Rams mortgage portfolio to a group including KKR, a move Miller says further simplifies the bank. Now, Berkshire Hathaway, massive one over the weekend. Cash pile surging to get this. We're near the $400 billion mark, aren't we? $382 billion. That's the latest quarter. As earnings also jumped at, of course, the conglomerate of the Oracle from Omaha. The firm's cash hoard grew as Mr. Buffett there avoided deals during the quarter. We all talked about valuations being on the heftier side of things. The insurance underwriting profit more than tripled. Berkshire declined to buy back shares for a fifth straight quarter, and the stock has tumbled almost 12% since, of course, Buffett said in May that he would be stepping down. Right, let's stay on the earnings theme. So I would say we're wrapping up the bulk of earnings, although the bulk of the big ones are still ahead. So we're about 80%, a little over 80% of earnings season MSCI China. You still have the reason I alluded to the big ones. Of course, you have the big tech names still on deck the next few weeks or so. So far, it's been largely disappointing in both revenues and profits. On deck this week, you have Hua Hong Semi and Yum China set to report earnings these next few days or so. Plenty more ahead. This is the China Show. Good morning. So this will be heading to the Japanese lunch break. Things were on holiday over in Tokyo for Culture Day. There we go. All that is to say no cash markets, although you do have some proxies, of course. Futures contracts are trending to the downside. We're not feeling the weak yen effects. We could get that, of course, later on in the week when things reopen. And as you can see, dollar yen, in fact, a better look at dollar yen right now, all on a year-to-date basis. We're not back to levels last seen in Feb. So who would have thought we'd be back above 154? The dollar strength that's come through and the repricing around number one, the Fed, and literally the other side of that exchange rate is the yen around the BOJ, and no guidance as far as December goes. So we're actually moving into the situation where possible, maybe not likely, but possibly the Fed and the BOJ will no longer move for the year. There we go. Dollar yen sitting at 154, lowest level here since Feb. Let's get it back now to this big event week here in Hong Kong. We have FinTech Week for one, and our tech correspondent Annabelle is there for us, standing by with.
Connections are everywhere. Some are harder to see. So Barclays Investment Bank connects you with data, insights, and solutions to reveal new possibilities. Barclays, powering possible.
We can't calculate our total taxes.
Sales tax, real estate, solar incentive.
And we have no way to integrate all that.
No, but BDO does.
People who know BDO.
By with her next guest. Bill.
Thanks, Dave. Yeah, I'm joined this morning by the Group Chairman and CEO of Primavera Capital. That's Fred Hu, of course. So, Fred, great to see you again on Bloomberg TV. We can start, I think, with US-China. We'll get to the tech side, the fintech side in a moment, but we did as well have the talks between President Xi and Trump last week. So I'm curious for your views on the outcomes from Busan and whether you were encouraged at all by what we heard.
Well, I think the summit was successful. That both leaders have been able to put the bilateral relationship back on track with some stability and preventing otherwise very disastrous outcome for both countries and for the world economy at large. So I think the truce reached by the two leaders, two countries, I think is really a great reassurance for global markets and for global economy.
How do you see it developing? Because obviously there's big points of contention between both sides. It's difficult to really see how they'll be able to see eye to eye on areas, for instance, like rare earths, which remains a big bargaining chip for China. What do you think is the next step and the evolution of the relationship from here?
Well, I think just the experience of the last couple of months has told us, like it or not, the two economies are still highly dependent on each other, and in fact, the world economy is still highly wide, to be interdependent. So, if you want to penalize a trading partner, whether it's by high tax or export control, yes, you exact the cost on your partner, but you also inflict a lot of harm to your own economy. Like this whole entanglement with whether it's chip restriction or rare earth curve, right? Told us very, very clearly. So I hope now with the truce in place, that gave the time, gave the more cool down emotion and space for both governments to really engage and step back, say, where we want to resolve some differences. Okay, some are maybe long-standing, but where we should continue cooperation, like trade or investment or technology, right? Because it's essential for each country's own economic prosperity, and also, given the sheer size and the scale of both US, China, so the actions they take against each other will have global ramifications. So they need to be also mindful of their global responsibility, to be sensible, to be reasonable, right? So that's kind of my hope.
What about from the side of Beijing? Because of course, as I just said, that big bargaining chip, but their main point of leverage is the rare earth controls, and those effectively remain in place. It's something that has caused a lot of issues with other potential or other trading partners, like in Europe, for instance. Do you think that that's the right move to keep those restrictions, or does China also risk being labeled essentially what it's saying of the US, that they're an unreliable trading partner?
No, I don't think it's China's intention to have worldwide control over rare earth, given that China's central role, but also, the central role of rare earth in the global economy, right? I think it's more like a messenger, okay? Because, over the years, particularly led by Washington, but also European willingly participate in this whole technology blockade against China, particularly with the high-end semiconductors. Not only the semiconductors per se, but also the equipment making semiconductors, which is up to the ASML, right? So Europeans have been cooperating with Washington in this blockade. So China, they say enough's enough. We have, guess what? We have some leverage too, right? Rare earth is one of them. So it's more like just in the wake of the summit, and China want to send a message, okay, to all parties involved. So now with the truce between Washington and Beijing, I don't think any issue standing in the way between Brussels and Beijing. I believe it's not intended, to harm European multinational businesses, and also Australia and New Zealand. That's not the issue. I think it's more. I was the whole thing is more about the US and China. So, and hopefully now they realize each other are still, at the end of the day, divorce is a very messy, costly outcome. Let's find a way to live together, to do trade with each other.
How do you think China's economy is holding up in this environment as well? What's your perspective on what we're seeing in terms of the economic data?
Well, in light of this escalation of trade war and also technology financial war, mounting uncertainty facing Chinese businesses, investors, and even average consumers. Actually, Chinese economy has been holding up surprisingly well. Actually still quite resilient, right? Against all odds. So this are again just due to the fact that Chinese economy is not a small economy, it's very big, very diverse, and also over the years, the whole economy has been more resilient, right? So let's reassure it. But the key for China to be sustainable in its economic growth is get the domestic act together, particularly, domestic demand, private consumption, China needs to get it right? And then obviously continue innovation. So with the very strong, robust consumer demand and with the continued strength in innovation, Chinese economy will do very well, not only in the short term, but also in the mid and long term.
You're really on the messages of the fourth planet because they were the two big takeaways, lifting consumerism and then also
Blue Owl has been redefining access to alternative investments since we opened our doors. Our team of experts can help you move your private markets strategy forward so your portfolio gains diversified exposure with quality investments, which is a difference that makes a difference. Access to private markets is open. Let us show you around. Blue Owl, redefining alternatives.
For most people, risk means danger and uncertainty. For me, it means opportunity.
For a short lead.
Risk is a constant. It's something to embrace and manage.
Shot for the win.
It takes focus, resilience, and discipline. When the pressure is on, I feel right at home. How do you manage risk?
CME Group, where risk meets opportunity.
and then also pushing that self-reliancy or self-resiliency in the tech sector. On those opportunities so that we see in tech in particular, which sectors are you most interested in China today?
So China is not just one pulling trigger. It's like the US, China generally, has become a major global innovator across spectrum. AI, right? That's what we are focused on. So China is upcoming strong leader with tremendous potential. Climate tech, energy transition. So China again is a global leader in renewable EV, batteries, and next gen energy infrastructure. Then third is automation and robotics. Again, so a lot of exciting. Really, I was just in Shenzhen, Guangzhou over the weekend, and I've met a couple of founders, and they are doing really cool innovations, in robotics. So I think these are three areas, but